Alright folks, how's it going? So it's been a little while since I did a performance update, so I thought I'd just put one in here. I've made a couple of moves as well, which I'll go through. So yeah, it was the 12th of December the last time I did a performance update. Since the 12th of December, my portfolio is up 3.72% on my unitisation spreadsheet. And it looks like I've beaten my comparators. The best one being Life Strategy 100, that was just up 2.13%. And then obviously lower performance for the ones that have more bonds. And from the 6th of October, I'm winning against Life Strategy 100. But then the usual, this bit here stops me from getting too excited about what happened recently, because I'm only up 55.4%, and the Life Strategy 100 is up 118%. And then obviously the other ones are up by less, but still way more than me. So obviously this is what's kind of prompted my last video, where I'm kind of gradually giving up and going for trackers. It's what prompted it, but it's also what makes the last video a bit more galling, because obviously the closer I go to Life Strategy 100, which is mostly a tracker but with a UK bias, which is reducing soon. It's going to go from 25% to 20% in the equity section of these portfolios. But yeah, the closer I get to that, the less likely I am to catch up this massive deficit here. But also the less likely I am to go further behind. So I don't know, there's swings and roundabouts on that. I have mixed feelings. But obviously I'm doing the transition gradually anyway, so it's not like I'm overnight going to turn into a tracker fund, or a fund of tracker funds like this is. Yes, so that's that. But yeah, I mean, this always happens. At the beginning of my accounting year, from the 6th of October, at the beginning of the year, I always seem to fly ahead at the start, and then by the time the 6th of October comes round, I always seem to be behind Life Strategy 100. So anyway, I'm not going to get too excited because of that. And then what's happened with the dividends? I haven't updated the spreadsheet yet. That's annoying. 4048 is what I've received so far. So yeah, since the 12th of December, I've made £1524 in dividends. And then the notes of what I've been up to. This is what I've told you about in the last video. I don't know why I haven't deleted it. But yeah, this is everything I told you in the last video. If you haven't watched that, go back and watch that previous video. That'll tell you what's happening there. And then the other things that have happened since the previous video, on the 16th of January, Impact's Environmental Markets announced that they're having a tender offer for all of their shares, or they're going to try and have I don't know exactly. They've got Saba on there. I think they own like a massive chunk of IEM, and they want to take over the management of it. Well, they haven't said that, but that's obviously what they want. They're being very sneaky. They're just being silent, really. But they're trying to take control, basically. So IEM announced a tender offer. And like on the day, the share price jumped up to like within 1 or 2% of the NAV of the fund. Previously, it had been down at like, I don't know, 10, 12% discount to NAV. See if we can show you on the chart what happened. So hopefully the 1 month chart will show it for Impact's Environmental Markets. You can see here it jumped up 7.48% from the 14th. Well, I guess this is the jump from based on the announcement, like 6% up. So it got close to NAV. So what I've done is I've just sold. I didn't want to wait around for the tender off, because I don't know if it's going to happen or not. But if it does happen, there's this gap between them selling their assets and then giving the money back to the shareholders if it happens. And I just, to me, that feels like money out of the market. I don't know, I feel uncomfortable having money out of the market, whatever it's in, whatever share it might be owning. I don't want the money out of the market. I just want it to sit there. I want it to ride the market. I don't like the gap, because it could go against me, that gap. They could sell all of their underlying assets, and it might take, I don't know, a month to give us our money back. And in the meantime, general markets might have gone up in that month. So I just don't like the whole long-winded process of waiting for the cash to get to us. So I just sold, basically I sold everything I could that was in tax shelters. So you'll see here that I've now got about £2 grand left over in IEM. figured that's a small amount, small enough amount. So I've just leave it there because it's in my GIA. It's in my general investment account, so I'll just leave it there. It's at a big loss. So I just left it there, but then with the bulk of the holding, about 8 grand, you'll see here that I've sold it and I've just put it into Acqui. So that's just gone into my, it's nice to sell it at a bit of a bump, still at a loss. Better than the day before though. So yeah, I've just sold that, most of it, and obviously when the tender offer comes through, or basically in April, I didn't want to buy it and sell it twice, you see. So when I have a ISA allowance in April, I'll sell it and put it into Acqui probably, or something like that. One of the things, whichever one makes most sense of this kind of total return drawdown portfolio. Haven't called it a drawdown portfolio, but I guess that's what it is really, because I'm just investing it. Mostly they're accumulation funds, and I'm just selling whatever I feel like selling each quarter to get my income in quotation marks. Yeah, so yeah, that little tiddler there will disappear along with Lowland. I've kind of committed myself in my mind to selling the rest of Lowland when I've got a tax allowance, when I've got a ISA allowance next year, next April the 6th. Yeah, so yeah, most of IEM's gone. And then on the 28th of January, a couple of days ago, Labs, so this is the Life Sciences REIT, I believe it's called. I've got rid of it there because I've actually sold it. Because they had an offer that they've, I can't remember what the words are. Not suggested. They've approved? No, not approved. What's the phrase? Recommended. They've recommended the offer from British Land to buy at 114 pence in cash plus 0.07 British Land shares. I did the sums on that, and it wasn't quite as high as that. But if you do the sums, it was about 42 point something pence, determined by the British Land share price, 412p at the moment. Basically, it got so close to the kind of pence amount that I just decided to sell straight away. I've jumped the gun like this before on offers, but I feel like this isn't going to get any better. But I felt like that before, haven't I? I remember when Hypnosis had an offer, I sold that too soon. When, what was the other one? Assura, I think? Did I sell that too soon? I definitely sold it on the offer. But I think there might have been offers after that came through. I don't know. I guess I jumped the gun, and I've possibly jumped the gun again, but I doubt it. So basically I sold it. The reason I sold it, to be honest, I wouldn't mind holding British Land. It seems as good as any REIT with my limited knowledge of how to analyse these things. I wouldn't have minded holding it. The thing that stopped me just holding on and letting it turn into British Land is the fact that 14.1 pence of it comes in cash. And what I didn't want, similar to the IEM thing, what we don't know is, basically that 14.1 pence is fixed. But we don't know how the sentiment for REITs in general is going to change between now and when the offer completes. Because what I was thinking was, if however long it takes, I can't remember what the schedule is for this, but let's say it takes a couple of months. If the sentiment in REITs in general goes really good in the next couple of months, it doesn't improve the 14.1 pence that I get, and I still get the same number of British Land shares. So I just felt like I'd prefer, because we were so close to the value of the offer based on the current British Land price, that I figured just take it now. I figured, because as usual, big jump, 20% jump on the day because the offer was higher than the share price that was going at the moment. If you worked it all out, and it was pretty close. I think it was only maybe 1% or maybe a couple of percent away from what the value would be if it just happened overnight. And we got the 14 pence and we've got the 0.07 British Land shares. If that all happened in the moment, it was only like, I can't remember, I think it was something like, maybe it was 0.5 divided by 42. Maybe it was a percent or two out from that. So I just decided to sell it straight away and get the money into REITs so that this 14.1p didn't suddenly look unattractive in a couple of months' time when I got it. So yeah, so I sold out of. So what I did was I sold out of British Land and I put it into two other REITs that I already own. So RGL and SREIT, so Schroeder. So basically, it's the two that I already own. I bumped up these holdings, so they're now a lot closer to the bigger holding I used to have in Target Healthcare REIT, which is here. So that, yeah, the money went into those two. Yeah, because British Land wouldn't have been a bad buy, 28% discount to NAV, but I don't know, it was the waiting thing. It's the gap between getting between the offer saying 14.1 pence and then it actually happening. Who knows? Because these fellas could have grown. Because obviously the 0.07 British Land shares that the offer has included, they will go up with the market. If all of the REITs go up in share price because the sentiment gets better, the 0.07p element of the offer, that goes up with the market. But the 14.1 pence, that stays static. So that's why I didn't want to just stay in the shares. I mean, I could have just put all the money straight into BLMD, couldn't I? But I don't know, I kind of like RGL and SREIT better. RGL has a bigger discount to NAV, but SREIT, Schroeder Real Estate Investment Trust, has better prospects for dividend growth, I think. So it was a nice balance to put it half and half into those two, and it just tidies up my portfolio. It's one fewer line in this spreadsheet of my portfolio. So yeah, put all the money into those two. Yeah, and I've written a note here. Look how awful this was, because if we remember, yeah, this is a terrible trade. Because the money I put into labs, we can see here, lost me 3%, and there was no dividends whatsoever. So that's terrible. But what makes this trade of buying labs even worse is that if we go back in the spreadsheet to when I bought labs, where is it? Oh no, it doesn't show. It doesn't show. Okay, so I bought it on the 13th of May. What did I sell on the 13th of May? 13th of May, where is it? Oh no, I'm looking in the wrong place. It's here. The sell date's here. 13th of May. There. This is the thing I sold on the 13th of May. Biotech Growth I sold on the 13th of May for 693. Let's have a look at how Biotech Growth has done. This absolutely destroys my soul. There's the spoiler. What's happened since the 13th of May? Where is May? It's further back, isn't it? Look at the chart. We already can see the chart. Oh my god, this kills me. 13th of May. So this is 700. This is slightly higher than I sold for. 72.14% Biog is up. Absolutely galling. And actually, if we go to the date I sold, which was the 28th. Was it the 28th? Yeah, I think it was. Yeah, it was up 77% on the day I sold labs. Absolutely awful. I couldn't have sold at a worse time, could I? Well, I could have sold down here. But yeah, that's a pretty terrible time to be selling labs. Sorry, not labs, Biog. Yeah, so that is awful. This is why you should just not do anything. They say the people with the best returns are the dead people because they don't do anything. They just let the portfolio be. Yeah, and then the last change was on the 29th. We had Meta and Microsoft reported their earnings on the same day. At the time, I had about the same amount in each, but then on the earnings, Meta went up about 10%, Microsoft went down by about 10%. So I thought, why not just get them back? Why not just rebalance back again so they're about equal? And maybe Microsoft will have a bit of a comeback here on out. So yeah, I think Microsoft, yeah, we can see the Yeah, so Microsoft is now slightly higher because it's done slightly better since I made that little swap of 180 quid in the two. Yeah, so that's that. That's all the changes I've made. Okay, yeah, and I forgot to go through the performance attribution, didn't I? So we can see from the 12th, in this little portfolio, this little sub-portfolio, ASML's done amazing. CrowdStrike's down. Microsoft is down. That was all pretty much on the earnings date. That was pretty much all on the day the earnings came out, or the day after. And yeah, Alphabet's continued to do well as well, hasn't it? And Amazon. Yes, that's done pretty well. And then for the rest of the portfolio, as usual, the thing I've sold has done well. I dread to look at Murray International because I sold all of Murray International. I think I'm just not going to look because I'm scared to see how well it's done since I sold it. But yeah, Scottish Mortgage has done pretty well. We're up to 42 grand. I think it's my biggest holding now, actually. Yeah, it is. Well, I mean, I guess it had a head start because Murray International got sold. Because that was my biggest holding. And well, obviously, except for the tracker, because obviously I've put loads of money into the tracker recently. The global tracker, that is. Yeah, so Scottish Mortgage done well. And Target Healthcare, yeah, that's done well. Go Street Energy's done terrible, of course. We had that terrible news. I can't remember what the terrible news was. But yeah, I remember it doing badly on a certain day. And nothing so dramatic with all of the others. But yeah, Lowland seems to have... I think Lowland's done well since I sold it. Or since I sold the bulk of it, anyway. Which is always going to happen. I've just with this whole transition of the green section of the portfolio, I've just kind of had to say to myself, that's going to happen. Because what happens, momentum is a thing, isn't it? I've noticed that when things do well, they tend to carry on doing well. So if I'm going to wait for all of this green section of the portfolio to have a good little run before I sell it and put it into the black section, I'm just going to have to accept that it is going to carry on doing well. But for the longer, for like the 5, 10, 20 years, hopefully it's the right decision to sell it. And you can never time it perfectly, of course. Because I reckon Lowland has had a pretty good run since I sold the bulk of it. Let's have a look. Yeah, it's up 5.49%. It was the 12th of January. This is a better way of doing it. 5.18% compared to what I put it into mostly. Well, here's all of the things I put it into, and it's beaten all of them. So yeah, this is going to be a trend. As I transition out of this green, it's definitely going to keep happening. I'm going to regret it at least in the short term. Maybe for a couple of years, I'll probably regret it. Okay, anyway, there we go. I should try not to look back on these things, shouldn't I? I should just make the moves and just let them be. All right, I think that's it then. I guess I'll see you next time. Bye.